Hey, good day, everybody. Today I am talking with Jim Cacioppo. I know I mispronounced that even as I said that, Jim.
Cacioppo.
Cacioppo. All right. Today we're talking to Jim Cacioppo of Jushi Holdings. And, we talked to him, I think, sometime back in either January or February. Certainly a lot has gone on in the world since then. Cannabis in general as an industry has done very well throughout. It's proven its place as a defensive industry. And so we're going to, after a few months here, Jim was gracious enough to hop back on the horn with us and talk to us about what's going on there and some of the recent developments at the company. So Jim, welcome.
Great. Thank you, Don. Happy to be here.
So to start off, why don't we just catch up a little bit with a quick overview of Jushi, where you guys are, what states you're operating in, and your overall business model.
Great. So we are in 3 main states, plus we have some small operations in another 3 states. So our 3 main states are Illinois, where we have 2 stores operating under the adult use program, and we're building 2 more this year. Those are tremendous stores. They do big numbers, very, very big numbers. And then in Pennsylvania, we have licenses to operate 15 stores. We're opening our 8th store tomorrow, so in Reading, Pennsylvania. So that's exciting. And we are doing an acquisition to vertically integrate in that state that's been announced. It's a facility where we could have about 70,000 square feet of cultivation. And I believe there's about 45,000 feet that will be completed by the time we take it over. So that's super exciting, and I'll get back to why we love Pennsylvania. But it's, I think, the best medical market, and likely to go to adult use in the not so distant future.
Yep.
And our 3rd big state's in Virginia, and we expect to get approval to open up our vertically integrated business in Northern Virginia. We have a sole exclusive right to operate in Northern Virginia, and that's an exciting spot. We could open 6 stores. That includes places like Reston, Fairfax, Arlington, where all the action is. The top MSAs in the state are all in the northern part where we are, and we have the exclusive right to do that and open 6 stores.
What do you mean by exclusive right there? What does that mean?
Nobody else can open a store in that jurisdiction.
Oh, okay. And how big are those jurisdictions defined?
It's several counties in the northern part of Virginia. So it's about 28% of the Northern Virginia population. We have exclusive right to serve their medical cannabis.
How long is that? That's okay. That's I was not aware of that part of the Virginia market, especially in so that would be. And how long does that exclusivity last? I mean, have they?
Well, until they change it. You would think that the programs change, and there's no reason
they can't change it later on. Yeah,
exactly. They can always change it, but usually when they do that, it's because it's going to go adult use or some other thing's going to happen where they add more licenses. That's typical model. You saw that in Illinois, for example. Okay. So that Virginia is super exciting. It's a kind of a secret that a lot of people don't understand because Jushi is only one of 2 public companies to be in Virginia. So, if you look at the big guys like Curaleaf and GTI and Cresco, they're all not in Virginia, truly not in Virginia. So it's not a state that people really understand. And it's something that you get a fantastic bang for your buck when you invest in Jushi. In fact, I would put, if you look at a company like Cresco, it has a fantastic Illinois operation, a good Pennsylvania operation. We happen to have a fantastic Pennsylvania operation, a good Illinois operation. I would put our Virginia asset up against any 3rd state of any company, including them. I think it's going to be a great state, and it's just opening up. The medical market there is literally opening up, I think, for sales this summer. We were a little late in getting our construction completed, and our facility is going to be up and running, starting to grow in August, likely.
Yeah, no, that's it's definitely the state is behind some of those other ones, but that certainly doesn't. It's all looking forward, and there's tremendous potential in Northern Virginia.
It's a great state. Virginia, 8.5 million people, one of the fastest growing state. As you know, Amazon put their HQ2 there. That's right in the middle of our exclusive region. So it's. I mean, there's very few states, I would say, in the country as vibrant as Virginia. and
No,
particularly we're on the
it's
northern part
wealthy.
of
No,
Virginia,
I
it's
agree
the
with you
most
100%.
vibrant part of it. Yeah.
Have you got some dispensaries open there and operating yet?
No, the medical market there is just getting underway. Just getting
Right.
underway. We'll have one opened up, I believe, in August, and it's a delivery market too. You can deliver.
Yeah.
So we'll have the right to do 6 dispensaries, cultivate, process, and deliver. So it's a great license. We're really looking forward to serving the patients in Virginia.
Yeah. And so, all right. Well, and that's and certainly the because that's a great overview. Got a real good. I think subscribers should have a pretty good grasp of where you're operating. Do you? While we're on the subject of states and various markets, what you mentioned 3 other states that you've got some smaller operations in. What are those, and where would you really like to be?
Yeah,
Where
so the smaller operations where we've just started building out business is in Nevada. We have a cultivation and a processing facility. That market was hit hard by COVID, but it's coming back. And there's a lot of companies that look like they haven't survived. And so our products are selling, and we're getting okay prices. Not the best, but okay. We're likely profitable this month there.
is it a dispensary strategy, or is it going to be a branded product strategy? Is that what you're
It will be third party and branded. Yeah, we'll do some third party stuff, and we'll do our own brands. We have a flower brand called The Bank, and we have an extracted products a brand called The Lab. They're both very, very big brands in Colorado. The Lab, in fact, I think I saw something by Slang that it was the 12th best-selling brand of all time. Given that Colorado was the first adult use market and first medical market, it would make sense that they would have of all time a top brand like The Lab.
Yeah.
And then so that's Nevada. That's one. And then the 2 is California. We're opening up a dispensary in Santa Barbara. We also have one application, hope to open up a dispensary in Culver City next year. And then Santa Barbara will open up in August, and that's going to be flagship. I think that'll be a fantastic dispensary. There's only 3 allowed in Santa Barbara. You're not going to get a much better demographic than in a place like Santa Barbara in terms of the income levels, and there's only 3 stores, so we're very excited about that. But that's just the beginning of our opening up a retail presence in California. Those 2, Culver City is one of the most fantastic locations you can be. I mean, it's super high growth area, more construction going on in Culver City on a per square mile basis probably than any city in the country. And then the 3rd state where we're just getting an operation going is in Ohio. So those are our, I would say, beginner states, but the big bang for Jushi in the next 2 years when you follow the company are definitely Illinois, Pennsylvania, and then Virginia.
And so Pennsylvania, you mentioned that, what do you know about their efforts to go recreational? And I imagine, is it going to be a ballot initiative?
It appears to us like it will not be a ballot initiative. So very importantly, you always watch the bordering states because they influence the states. Because if you don't, so New Jersey has a ballot initiative that goes up in November. You only need 50, from my understanding, 50.1% to go adult use in New Jersey. And that shares a very long border with Pennsylvania. The governor has come out September of last year saying he supports adult use in Pennsylvania. The lieutenant governor came out supporting it. There's a bunch of things that have gone on in the legislature. And so we're in the process as an industry of trying to, educate what we think the program should look like. And there's noise that there might be something brought up at the end of the year, and then so it could be a reality in 21 or certainly by 22. I think would be my base case.
Yeah, it's certainly having a medical market, you capture a big part of the population there anyway. But with all the need for stimulus and economic redevelopment, it's just this. There seems like there should be a massive incentive to for all these states to really get in line and get recreational programs on board. But,
Don, I think you hit the nail on the head there. I think with this COVID crisis causing a lot of economic damage throughout the country and the fiscal situation in these states being very constrained, they're running deficits. The legal cannabis business presents them with a very nice tax a tax situation for them to increase their revenues. It's also popular. It polls very high in most states, well into the 70s in most states. People want it. And the impact, we can serve a large part of the population medical, but your sales, the market tends to triple pretty quickly when you go to adult use.
Yeah.
And I think the biggest constraint on it tripling isn't the demand, it is the supply, because it takes
absolutely.
you can't just all of a sudden triple it.
Yep.
So to point this out, we think we're very pleased with Pennsylvania. We have the largest footprint that you can have, which is 15 stores, and which is about 10% of the retail outlets that are licensed under that program. And then we're doing an acquisition for another not another, but a vertical integration where we could do cultivate and supply ourselves and others in the market with flower, and also process with our branded products like the lab and other people's branded products. So we're going to be an integrated producer in what could be one of the best states in the country. So I think it's a Jushi may present, I think, the best pure play on high growth states like Pennsylvania, Illinois, and Virginia. And if you want to play Pennsylvania, if you think Pennsylvania is a great state, if that was your point of view, Jushi may be the best bang for your buck, because we're not a big market cap company. So when Pennsylvania, explodes, if it does with adult use, Jushi will be a great way to play that.
Yeah. And what about someone, kind of COVID and the shutdown? I mean, the remarkable thing has been not necessarily across the industry, but for a lot of operators, pretty significant uptick in sales, right? And looks like it's more than simple hoarding there in March. Some of those, that sale acceleration continued through the next few months. What was your experience with the dispensaries that you've been operating?
So right now we have 10 dispensaries open, 2 in Illinois and 8 in Pennsylvania. I would point out that 2 of our stores in Philadelphia got hurt during the protest riots, and so we had to close those. We're reopening one tomorrow, I think, or I think it's tomorrow. The other one reopens at the end of the month. And that happened to a lot of operators. We weren't alone in that. So let's call it 10 right now that we have. And so what we saw was in the sales was a real big uptick in March. I think it was hoarding. And then people stayed home in April. So it did tick back down, but not like, it still was better. April was better than February, so it wasn't but March was definitely a high point until May. And then people started coming out in May again, and our sales, we hit record sales in May. So we look at annualized sales for a month. In March, we did 50 million of annualized sales. So meaning you take
how many?
$50 million.
Okay.
That's a month of March times 12 months. So it's a month of March times 12. At the end of the year in December, we did 25 million. Okay. At the end of May, we did I think it was 65 million for the month of May. Okay, so the growth has been really tremendous. And we didn't open up any new stores between March and May. That's the same store base.
All right.
So, but we did have one factor that's made it better to shop at Jushi, easier to shop at Jushi stores, called Beyond Hello. And that we did a website called beyondhello.com. And on that website, you could go in and shop and pre-order, and then just go pick up your product at the store. And then the COVID crisis has brought on different ways to deliver it to the patients. They could just do curbside pickup, and we've gotten special area of the stores opened up so that patients can go in and get a pickup without exposing themselves to the full store. So it's good for the employees, our employees. It's good for the patients and the customers. So we've had some things that allow us to increase the throughput in the store, but I think a big element of that has been the increased demand from COVID and the destigmatization. To some degree, the cannabis industry is destigmatized by COVID in the sense that it was deemed essential services.
Yeah,
that's not an easy designation to get, right? Yeah. So then they allowed it to stay open and made it easier to serve patients, without them being exposed to the virus. So really, I think cannabis has come through big for people, and it's an anxious time. So I think people are using it. for anxiety and sleep and those types of things. So yeah, we've seen a big uptick in demand. There was a recent article in one of the industry newspapers that pointed out that sales of the legal business in 2020 have increased by 40% thus far. So that's a big increase for the industry.
Yeah, absolutely. So what other steps did you have to take though? So you had this it sounds like this online store up and going before it hit.
No, it didn't. We opened it in April. We
did? Oh, okay.
opened it in April. So when you see that big uptick in our sales from that roughly $50 million number in March to the $65 million in May, that was COVID and online sales and just us doing a better job running the stores, because we had just acquired and opened these stores last year. So it was all that combined for us to have an amazing growth rate. When you think of over 2 months, we grew sales by 30%. That's just huge. In just 2 months, not an annual rate, but that's a 2 month, So that's a really, really big, that's 180% on an annualized basis. So yeah, we've seen some really big growth, and we're super excited about that. And we're opening, Don, the story continues, right? I don't expect this organic growth like we've had to continue at this huge rate, because it's been so high. I think we'll still get some of that, don't get me wrong. But what we're going to see is a opening of stores at our Jushi-owned stores at the Beyond Hello brand. We're going to open 2 more Illinois stores. Like I said, we're opening one tomorrow in Reading, Pennsylvania, and then we probably get one of the Illinois stores open in October, one in December, and then we also open 2 more stores in Pennsylvania and one in Virginia. The whole Virginia operation gets going. So we're talking about 5 stores. So we have a store base of 8, and we're going from 8 to 13. So you'll see a very big sales uptick at Jushi just related to our store openings. You'll see some organic sales. And then this acquisition in Pennsylvania, we expect to close that by the end of the month. And that's going to add sales. And that's a cultivation that we have big plans for to sort of expand it and make it more efficient. And that's going to do a big job in increasing our sales. Yeah. So we put out guidance for the fourth quarter that we thought in the fourth quarter we would do 25 to $30 million in sales in the fourth quarter. Yeah, and again, annualized that would be 100 to 120 million annualized for the fourth quarter sales. Yeah. And we'll even exit in the fourth quarter with all the store openings late in the quarter. We're going to exit even at a bigger clip than that 120 million annualized. So this company is growing very, very rapidly. Jushi is.
Fourth quarter calendar or your fiscal year? Which is that?
That's the calendar. Our calendar is a fiscal. It's the same.
Oh, okay. So, but last quarter of this year, you're looking at maybe running at 100 to 120 million dollars in revenues.
In annualized sales, yeah. And then exiting at even a higher level, because December we'll have the effects of a store that we won't have seen in November or October. Yep. That operation we're acquiring in Pennsylvania will turn that around. Virginia will grow slowly up into each month. It should grow because it's a new market. So we have a lot of factors causing us to keep growing real fast right through December. So our exit run rate, I would hope, is significantly higher than the 100 to 120 million of annualized sales.
So a couple questions around that, and one of this kind of points to one of the things that concerns me, and you can maybe this is a good opportunity to address that, right? So SG&A for Jushi is significantly more than revenues, right? You're looking at about 100.
SG&A revenues, right? Annualized SG&A is $18.5 million at Jushi. Okay. And sales at Jushi, like I said, at the end of we published it, we were run rating at the end of June, we were run rating it, if you include our 2 Philly stores as if they were open, that were shut down because of the riots, we were doing like 78 million. So sales are 78 million, SG&A is 18.5 million. So, we're actually with our ramp, we projected.
So those revenues must not have been in the last financials, I guess, right? I mean, are those?
No, because we're growing. You're right. If you look at the first quarter financials, the first quarter, we did a significantly less number than the 75 million annualized, or 78 million, excuse me. So no, I mean, they're not. You're right. So we're going throughout the year. So we did put in our press release and our quarterly earnings call, which was early July. Your listeners could go back and listen to that on our website. We did give guidance that we'd be EBITDA positive in the fourth quarter.
Okay, so you have the infrastructure in place, the overhead to support all the expansion that you've got planned for the most part throughout, apart from a few head count, I imagine.
No, exactly. I would say it even this way. So we have this platform we built. It takes you 2 to 3 years to build a management platform. I think the industry is littered with failures from, I think, poor management. I mean, if you look at some of these big companies that have imploded, I mean, it's not sales are growing by 40%. So what went wrong? Well, they blew up. What went wrong? They have poor management.
Absolutely.
So we didn't run our business that way. We said we're going to build the proper management team to run the business well. We've had access to the financing markets. We've raised over $200 million. Insiders have put in over $40 million themselves into the company. So we're a well-financed company. And that infrastructure, think of it, Don, as a platform that we can just just attach new assets on. So this Pennsylvania acquisition that we're doing, which is a big acquisition, we're paying $16.5 million in cash for that. And we're assuming a sale leaseback situation for $17 million. And we're giving them a seller note as well. So, but that, we can just bolt that on and we don't have to increase G&A at all. I think we can bolt on several more acquisitions. And what you said, a little bit of headcount, yeah, it's going to be accounting. It's going to be potentially a compliance person, not particularly senior people. Yep. So we're not increasing G&A to any large extent at all. As we
totally answered my question. That's the one thing that jumped out at me. So I appreciate that. And I realize you guys are very much in the ramp up stage. And you're in a good time to be in the ramp up stage as opposed to like a lot of the management teams that went after it 2 years ago and got way over their skis on capital. So
we've had a strong balance sheet, Don. So we've had the capital, we've raised the capital. I think we ended the quarter. You can get the exact numbers from Michael, but I think it was about 38 million in cash plus 12 million in marketable securities. So it's over 50 million of liquid assets to fund the business growth. That's very significant. And we raised some money in July to close off for this acquisition. So we have raised money on top of that. So we have the money in place to build a business to get to EBITDA positive in the fourth quarter, and that's a big thing. So when you talk about the investment case for Jushi, what do you like about that? If you're an investor, why invest in Jushi? Why not invest in these multi-billion-dollar companies? Well, we're just a couple $100 million company, right? And we're in these big states like the multi-billion-dollar companies are. And so what do they have? Well, they have a lot of revenue and a lot of EBITDA. What we have is revenue growing at a very, very high pace. We're going to be at a revenue level by the end of the year and into next year that a lot of these multi-billion-dollar companies are today. So you get to have that early stage ride with Jushi, whereas I think we're all going to benefit if Joe Biden gets elected. I think that's going to be a great thing for the industry. Not that I'm political, because I'm not, but the Democrats will, I think, push federal normalization of the laws, quicker than Republicans will. That's just what I think happens. So we're going to all benefit from that. We're all benefiting by the tremendous growth that's going on, the 40% annualized growth of the legal industry and new states coming on and programs getting expanded. We're all benefiting by that. With Jushi, though, you get to get a company that's early stages. You didn't miss out like 3 years ago investing in Jushi. It's a today investment. This is really
just got underway last year, and now
we're inflecting. And we're inflecting right now.
Yeah, that's great. So do you think? You mentioned the kind of the federal political environment. What are your thoughts there around? Is it dependent, do you think, on the Democrats getting in office? Is there, they have the same incentives to create those kind of to generate revenues and look like they're not getting in the way of economic growth. What's have you heard it? Have you heard anything that's going on in DC?
Yeah, well, there's been some public. So let me just back up for a second. So we're going to build a great company, whether or not the federal good news takes place sooner rather than later. So that's we're going to have a great company. And I've always, it's not a play on just federal legalization. However, there will be a big uptick. I don't know if you've noticed the last few days, but the stocks have traded very, very well in the industry. And one of the reasons why that happened is Bernie Sanders, who is pro-legalization of cannabis, and Biden, who has not come out, for legalization, has not.
Yep.
They had a joint commission. So their joint commission to try and have a unified party platform put forth some favorable positions for the industry. So
Great.
it looks like
Good.
in the platform, they're going to
Yep.
put in some favorable things for the industry.
Yep.
And I believe that what's going to happen, it looks much more likely that you're going to get a Democratic administration than that you did, a couple months ago, or 4 months ago, or 6 months ago, for sure.
Yeah.
And so, you probably, under that circumstance, get both houses of Congress under Democratic control. And, and that's going to be one of those things where there's a lot of people in the party who want to see decriminalization. With this a Black Lives Matter movement, there's been no part of the population more incarcerated for what is now considered a medical legal product. I mean, it's really awful if you think about what's happened. People serve jail time for using cannabis, or got heavy fines, lost their jobs, whatever it might be. Right. And it falls heavily upon the Black population. And so I think it's one of these things where it's a very important part of their mission in that party. And so, I tend to think that's going to push it along. I could be wrong. I mean, my crystal ball is, no better than yours, Don, but I do look at the facts, what's going on out there. And
that's an interesting development that they formed that commission. But yeah, it just all piles on to the multiple motivations behind federal legalization, and definitely the industry and none of that hinges entirely on federal legalization, but it certainly does would make it a lot easier and bring that forward a lot quicker, right? A lot of that market to as much as you can possibly keep up with in terms of growth. Well, and you did a couple of recent capital raises, so you're probably between what you mentioned, around 58 million on your balance sheet, and then was it another 15 million or so, 17 and a half? Was that the most recent raise?
Yeah, the most recent raise is 17.5 million.
Yeah.
And then we have some non-binding commitments for another 10 million out there right now.
Yeah, so that's just for our subscribers, that is a very strong capital position relative to you have to go to the largest players out there to have that amount of capital in terms of U.S. multi-state operators. So that's a great asset. Certainly in having the infrastructure in place to support those sales, right? So because you are in some very good markets and haven't got over your skis in terms of assets and that sort of thing. So in terms of capital investment, so those are all things that we love about it. What else should we? So this has been a great conversation. I mean, we covered a lot of ground, Jim. This has been really good. Understand the markets you're in. Got a good sense of how you guys plan on growing into the management overhead that you have. What else would you kind of like investors to know? What do they need to know about Jushi or what you guys are thinking? Certainly have a good sense of why we would invest.
Yeah. I think the main reason to invest in Jushi is a tremendous amount of growth and a strong management team that's going to get into free cash flow positive next year. The size of the market cap, I think, presents a very, very good value. If you look at it on a multiple basis, 8 Capital up in Canada put out a research report on us, and you could see, you could do a multiple analysis. We screened very cheap compared to the other ones. And actually, by the way, that's not necessarily, the market's not completely off on that, because our growth is very, very high, and we're growing, and our market cap will go up as our growth goes up. So it's going to happen. And so I think that when you get into something, you look at the growth rates, you look at the states you're in, and cannabis is most important. People are figuring that out. You don't hear these companies, most of the companies, talking about their Florida assets because they're all not making money in Florida. Sure, the top 3 are, but really nobody else is. And then New York, nobody's making money in New York. So the states and those are good states, don't get me wrong, they're great states, to be in theoretically. But the way the program is worked out, it's not necessarily the most economic states for the industry. So the states you're in matters a lot. So we have the growth rates, we have a very value-driven market cap, we have a great footprint, a very strong management team, a very strong balance sheet. Okay, and then that platform that I mentioned would be the last thing that I want to reemphasize. So we have this platform, we can go out and acquire more assets, and we can keep that overhead relatively steady at where it is at $18.5 million per annum. We can keep that overhead relatively steady and go out and acquire assets. some of these large multi-billion-dollar market caps, they don't have a lot of new states to go out and acquire assets. They're there.
So are you seeing the opportunities as you're looking to acquire? I mean, that was you reminded me of the one thing I wanted to, what are you seeing out in the market? Certainly, this has been, last year and the beginning of this year, right? That was that cleaned that cleaned out. It was actually great. It was needed to happen. And but are you seeing some pretty attractive opportunities out there to pick up assets?
I think there's a bunch of tremendous we're value players. We're good at like I have a business background in distressed investing, so we're value oriented investing. We were able to acquire these Illinois assets earlier in the year. We worked on that deal for like a year, but we were able to acquire those at a very, very low multiple. This Pennsylvania asset is a bargain, and our stock is probably up because of that. And so we've demonstrated that we've had two very value-driven acquisitions right there in this market environment. Our Santa Barbara asset we're acquiring at a very attractive price. We did that a while ago, but there were some reasons why we get that attractive price. So we have a history of getting these assets onto the platform. But I think the environment now, with all of these companies having assets for sale, you're not running into a competition, because again, the most healthy, well-capitalized companies, they're already built out.
Yeah.
Where's Curaleaf going to go?
Yeah.
Where's Boris going to go? I don't know where Boris goes for more deals. He'll have something here or there or something. Got a great balance sheet, but he's not going to be able to. So GTI, they've been very quiet, but they're in most of the states. There's not a lot for them to do. They'll do maybe a little bit more than Cura, but a little bit smaller. But again, there's not a whole lot for those really big boys who have the best balance sheets to do. So when we're in this environment, we're an acquirer. We can go out and raise money when we want to, and so there's a ton of sellers. I mean, MedMen selling,
Yep.
It looks like Ianthus needs to be
recreation backing out. Ianthus, regrowth brands. I don't know what they're doing.
Yeah, I think they're going through bankruptcy. I'm not sure exactly.
Well, they are. They're going through bankruptcy.
Yeah, and then there's a bunch of companies out there that have not done particularly well. And so, and then there's a bunch of others that are struggling, maybe not sellers, but they're not buyers.
Mm-hmm. Yep.
So we're in a pretty unique position. And when the buyers turn into sellers and other buyers turn quiet, and the biggest are already built out, it's a pretty good situation for very few companies like ourselves. You still have all the mom and pops out there who have trouble raising money, who haven't built out their assets. So we anticipate doing more acquisitions. We think we want to stay in state right now. There's no point. We don't like to be an inch deep in states. We like to be very, very deep. Pennsylvania and Virginia are models. So in Illinois, we have an opportunity to backward integrate through acquisition. We have an application for cultivation that we submitted in May. It was delayed because of COVID, so we'll hear by the end of the year what happens there. And then in Nevada, we have the cultivation and process, and we don't have retail. Nevada was shut down. It was the worst cannabis market in the country. Yep. And so there should be some opportunities there for us to take advantage of. So we're looking there. Yep. And then first thing we did was we studied our operation, because we got hit by that downside too in Nevada. But luckily for us, it was a small operation, and we had it under control. And then California, again, that's where all the buyers have turned into sellers. Yeah. Harvest is sold their operations. MedMen's looking to move some licenses in stores. And there's not many buyers. So it's a very favorable time to be in the states we're in. We also like Ohio. We have a tiny operation there that we're going to build out, but we have a lot of room to do acquisitions there. So there's a bunch of different markets for us, and we're feeling like it's all very possible, and we've never seen this kind of value in the industry, to be honest with you.
Oh yeah, no, absolutely. I would fully expect that you're seeing levels and an eagerness to sell like that you couldn't have even gotten a year ago, when it first started getting pretty tough on the valuation side. So no, it's a great spot to be in. California is a tough market. I think everybody's having a hard time figuring out that market, but Nevada's a great place to be. A few of the operators there were able to spin up those delivery services, and they, but a lot of them weren't able to turn around. The government pulled the 180 on them.
Yeah.
And that was just unfortunate. And I'm sure a lot of really good assets kind of got taken down simply because of that. But that puts you guys in a great spot. So congratulations. And I think a lot of companies envy your balance sheet for sure. It's a good spot to be.
I appreciate that. Thank you, Don.
Yeah. Well, Jim, this has been a great conversation, man. I appreciate it. I enjoyed talking to you. And I think you gave our subscribers a lot to digest and listen, and certainly made a strong case. So,
yeah, hopefully it's not too much. Sometimes
no, this is awesome.
Hopefully it's good.
Good. Yeah, this conversation. So, anyway, Jim, thanks a lot. And I hope I'll get a chance to see you maybe at a conference someday soon again, and we'll catch up, and maybe we'll do a follow up in a couple quarters and see how you guys are doing.
Great. Thanks, Don. Be healthy. Be safe. Appreciate it.
All right. Same. Thanks.
Great. Yeah. Bye. Bye.